Hello everyone, this is Dr. Pooja Sharma, working as Associate Professor in Department of MBA-SGI. Here, I will discuss about the objectives of financial management. In previous lecture, I have already discussed about the concept of financial management. Now, I will discuss about the objectives. What are the objectives of financial management? The objectives, before starting this, I'll give you the quick review of financial management concept. Financial management is what? It is the activity or financial action in which the company has to decide procurement and utilization of fund. From where company has to procure the fund, collect the fund at minimum cost, and where the company has to utilize it with profitable manner, means company has to get the maximum return on their investment. For this, company has to make the various policy, financial planning regarding with the profit, regarding with the liquidity. Company has to perform mainly four functions for the proper utilization and procurement of fund, and these functions are investing, financing, liquidity and dividend. These functions are very important for the company, and these company has to work on these functions for collecting the fund and utilization of the fund. Whenever the company will collect the fund, company has to compare the sources cost, means company has to collect the fund from the bank, from the private bank, and collect the fund from private bank, from public bank. So at that very moment, company has to compare their interest rate, which is the lowest interest rate. Company should prefer that, because that is profitable for the company. Because when the company has to pay, only company can collect the fund at 10% cost and get the return from that very investment 12%. So the 2% interest additional, that is profit of the company. So whenever the company will plan from which sources company has to collect the fund, company should see which source cost is minimum. And when the company will invest the fund, company has to see from where company can get the maximum return. So company need to work out on this. Company needs to work on this, from where company can collect the funds at minimum cost, and from where company has to invest the fund to get the maximum return. The objectives of financial management, or the financial management functions, is to arrange the funds for the business purpose as are required from the time to time. Means it is not an activity which is decided by once in a year. It is the regular action, it is the regular activity. Company has to make the changes as per the market conditions, because the market is dynamic, which is not constant. So company need to plan as per that. First or important objective is increasing profitability. Whenever the company has to plan anything, work anything, company needs to plan and control of company's fund. Purpose of that is to maximize the profit of the company. Because whenever any company works for the profit maximization, company works for the profitability. When the company will generate the profit, sufficient fund, and get the maximum return, then only company can operate the business for the long term purpose. So a proper control should also be exercised whenever the company has to use the fund for increasing the profitability. Second, proper utilization of fund. Proper utilization of fund means whenever the company has to collect the fund at minimum cost, that is important. But when the company will invest the fund, it is again important to utilize that fund in a proper manner to get the maximum return. The company has various alternatives. Company has to select only one to invest in a particular sector. Suppose company will invest in a health sector, or in a FMCG sector, or in a real estate. In which sector company can get the maximum return, company should work out for that only. Those projects should be preferred by the company which are beneficial to the business unit. Company should evaluate which is the maximum profitable project for the company before investing. So this is very important, and this can be done by the technique capital budgeting. Third, assessing the financial requirement. Company has to plan. Whenever the company has to plan or establish any business, company should assess what financial requirement, what the amount of fund, what amount of fund is required by the company for investing purpose. That is important. That is fixed cost of the company, which is used for establishment purpose. But when the company will start the business, company needs operating capital, that is working capital, and it is a regular circulating capital. So company needs to evaluate the requirement of working capital regularly, because company has to raise the fund from the different sources and company has to pay cost on that. If the company will not assess the proper requirement, company will collect the fund more than the requirement, so company has to pay the cost on that. So company should look into the matter what the requirement company has. As per that, company should collect the fund from the market, company should collect the fund from the different sources, and company should, as brief previous point that says, that company should utilize that fund in a proper manner also. If the company need funds for the long-term purpose, company should use the share capital source, debenture capital, bonds, long-term loans from the bank. If the company needs funds for the short-term sources, company should collect the fund from commercial papers, from bank overdraft facility, from the money market instruments. Last, maximizing the value of the firm. It is again very important. All the objectives are interrelated. When the company has to work for the profitability, that profit works, you can just see that the profit works. Objective is what? To earn the profit. If the company will increase the profit, that profit will goes to the shareholders or to the owners as a dividend. So when the company will work for the profit, it means the company will work for the shareholders, and that objective is known as the wealth maximization of the firm. Wealth maximization says the company will increase the value of the shares, so that is wealth maximization. Nowadays there are two main objectives of any company: first, profit maximization, and second, wealth maximization. Traditionally, company was working for the profit maximization, but now in modern days, company is working for the wealth maximization. Earlier, profit maximization, now more wealth maximization. But wealth maximization is possible with the help of profit only. So now the company is working for the profit, and that will goes to the in count of the shareholders account, and that will increase the value of the shareholders. So company is working for the wealth maximization of their owner, of their shareholders. So what we have discussed? We have discussed today the concept of financial management. What is it? Proper utilization, collection and utilization of fund. And another topic, objectives of financial management, assessing the financial requirement properly, then proper utilization of fund, then company has to work for the profit, increasing the profitability, then maximizing the value of the shareholders for the wealth maximization or increasing the value. These terms are interrelated. So thank you so much. In next lecture we will discuss about some other topics of financial management.